Hi, Mr. Rodwell. Can you hear me? Hi. I think he's still connecting.
So as we're waiting for Rodwell to join us, could you just give a brief background of what African Share is about?
Yeah, for sure. So I was definitely going to do that. Of course, my name is Judith, and this is Insure Africa. It initially started in 2017 as a short-term project. So the project only ran for a couple of, I would say maybe about a month or two. And it was an initiative where we had people going to secondary schools and talking about insurance, just kind of like educating people about insurance. But then earlier this year, I decided to turn it into a company. So just by June, it was incorporated in Nigeria as a limited liability company. So we're really new. And this InsureChat Ask the Experts is an initiative where we want to be bringing experts from around Africa to answer questions that Africans might have about insurance. And as you could see from the questions that we got a lot of questions. We actually got more questions than that. But just because today we want to give everybody an opportunity to contribute to every question, and that's why we only have a few questions today. And the way that this is going to go is I would basically ask a question and call on one person to answer, and then call on everyone else to kind of like contribute to the same question. And we'll go like that round until we're done.
Excellent.
Sounds good?
That's
good.
Hi, Mr. Rodwell.
Hi, how are you?
I'm good. How are you?
Hi. Good. So there are the issues of technology here, but at least now
Of
to
course.
hear you.
Totally understand.
Yeah.
I totally understand.
Okay,
Welcome.
okay.
It's so good to have you here.
Thank you for having me.
Thank you. So I think we're going to, so 1 second, I'm just going to chat Mr. Ekete up and see where he's at right now, and then we'll go live on Facebook.
Okay. Hi, Rodwell.
Hi, Chirufia. How are you?
Fine, thank you. And yourself?
Good. How have you been? We are in the same country, but we don't see each other.
It's been crazy this day, and I'm saying with COVID, it's not even making it any easier. But
But are you now back at the office?
The month of September, this month into October, I'm back in the office. Just trying to see how we close the year.
That's good. We resumed the full operation, I think, about 2 weeks ago. So we are all back, no rotation.
Really? No, for us, we still have, we're still working in different workstations. Yeah. And we don't think we're going to have full operations back in the office anytime soon. So,
Easy.
No.
So for us, what we do, we are mainly informed by the statistics. And I'm sure the statistics have now improved, but also the weather, when it's like hot season, at least the cases drop. Even last year we did this, but we noticed that towards December thereabout, the cases started increasing, and therefore we again went back to rotation.
Same. Hoping that it gets better as we go into the end of the year. Yeah.
So just a couple of minutes here, everyone. I'm just trying to connect to Facebook Live. I will be back with you shortly.
Okay, no problem.
Okay. Thank you.
And Kate, how are you? How are things in Nese?
Things are good. COVID-wise, it's really stabilized, We're seeing the cases have gone down drastically, where before it was really hectic, when we had the surge, but deaths and daily infections have really come down. And also the number of vaccinated individuals has really picked up ever since they introduced the age band of 18 to 34. So it's also, the intake of the vaccine has been very well received, even though the hesitancy is still there. You know, we can't doubt that, but the numbers have really picked up in terms of the number of people vaccinated. I think we're probably on 12 million. As per the president address earlier this week. So we're doing well.
That's
Good
really
numbers.
good.
Good numbers.
It's
Yeah.
good to hear from you. And yeah.
Can you hear us?
I think he's a bit frozen.
Yeah.
Yeah. I think he is, yeah. Yeah. So for us here, in terms of vaccination, it does not go by the age band. So you just decide when to go and get vaccinated. But I think there's been a bit of inertia. And so the government has been pleading with the population actually to go and get vaccinated. But so far, so good. The numbers are picking up. Yeah. But I think there's no deliberate campaign on vaccination, in my view. Of course, the Ministry of Health keeps encouraging people to go and get vaccinated, more so that it's not compulsory. So you decide whether you want to get vaccinated or not.
Wow. Interesting.
I guess it's the approach most countries are taking, the not compulsory, but we know that the companies are going to start driving it to be compulsory for us to go back to the offices. It will be interesting to see how it plays out.
Nice.
Our brother from Nigeria, how are you?
Welcome, Mr. Ekerete. It's so good to have you here.
Hi, I'm good. Thanks so much. Nice to be here.
And so
how are
I
you?
we're all doing well. Doing well.
Fantastic.
Yeah.
I was listening to the conversation on the vaccine and no vaccine, and it's interesting because just like any other thing that we have to do to help ourselves, we are slow. That's what I think.
Right. Right. Well, yeah, thank you all so much for being here. So my name is Judith. This is Insure Africa. Insure Africa initially started in 2017 as a short-term project. And beginning of this year, 2021, we decided to turn the project into a company. So by June of this year, the company was incorporated in Nigeria as a limited liability company. Right now, we're doing InsureChat Ask the Experts. It's basically an initiative where we bring experts from across Africa to answer questions that Africans might have about insurance. So super excited to have all of you here. On the list of experts today, we have Chilufya Nyerenja, who is the Chief Executive Officer at Stanbic Insurance Brokers. We have Mr. Ekerete, who is in Nigeria. He's the Chief Executive Officer of FinTrade Project. We have Mr. Rodwell, who is also from Zambia. He is the Chief Executive Officer at Holland Insurance. And we have Katie Kuzwayo, who is a Key Account Manager at Liberty Health Insurance. She is from South Africa. So good to have all of you here. I'm going to go right ahead and just go through all your profiles. And after that, we'll get going. Okay, so I have Chilufya. Chilufya's profile is so long and really interesting.
Go for it.
Yeah, so Chilufya, as mentioned earlier, is the Chief Executive Officer of Stanbic Insurance Brokers in Zambia, a subsidiary of Stanbic Bank Zambia, a member of the Standard Bank Group. She was in December 2019 named one of 2019 top 100 women CEOs in Africa by Research Global People, Pulse, and recently featured in the African Insurance Bulletin as a female trailblazer of the African insurance industry. Unveiled during the Africa Insurance Conference held in Johannesburg, South Africa. She was in November 2017 also presented with a Leadership Excellence Award in the Africa's Women Emerging Business Leaders category by CMO Asia in Mauritius. And she has also been listed and conferred with the citation of the 100 Most Influential Global Marketing Leaders listing 2016 by the World Marketing Congress in Mumbai in India. With exposure in the African, Asia, and European markets, Chilufya has over 21 years of experience in the insurance and financial services sector. Chilufya holds a Master of Science degree in Global Consumer Marketing with University of Liverpool in the UK, a professional postgraduate diploma with Chartered Institute of Marketing also in the UK, a leadership certificate by Duke Corporate Education, South Africa, and completed her executive program in innovation and strategy with the University of Oxford, said Business School also in the UK. Recently completed an executive program in digital disruption, digital transformation strategies at the University of Cambridge, George Business School, and now awaiting to complete another executive program at Henley Business School in South Africa. Head Personal and Business Banking Accelerates in September 2021. So that is Chilufya.
Can you roll the carpet, please?
Thank you.
I know, like, wow, I was going through your profile and I was like, how can one woman achieve so much and yet hasn't given up? Like, you're still learning.
Oh, I'm still learning and it doesn't end. Oh, thank you so much.
Yeah, it's so incredible. And, you know, just going through your emails, it was just so amazing. The last email that you sent made me really laugh. And you simply read, happiness on my side. So that is what I'm hoping for all of us here today, is happiness on all sides. I'm hoping that at the end of the day, everyone is going to be so happy. So thank you so much for being here. I'm super excited to have you here. Next, we have Mr. Ekerete. So Ekerete is an administrator, a business thinker, and customer advocate. He's a Nigerian born of mixed parentage from Akwa Ibom State and Kogi State. He is a graduate of economics from the University of Calabar and has been an active insurance practitioner since 1990, when he started his career with Leadway Assurance Company Limited. Ekerete is a full member of Nigerian Institute of Management and has been since 2003. He's a certified process professional and associate member, Risk Managers Society of Nigeria, and has been a member since 2019. He's currently involved in knowledge sharing and advisory services on insurance, strategy and management for business leaders, entrepreneurs, and policymakers. Ekerete has worked largely in the insurance industry at management and leadership levels with leading insurance brands, where he had hands-on experiences on takeovers, restructuring, strategy planning, and execution, change management, corporate development, brand reactivation, and customer advocacy. He is the Executive Director, Technical Assistance for Heroes Initiative, an insurance-oriented non-for-profit organization. He's a co-founder of Smart Coach Global Nigeria, a community of entrepreneurs and business coaches. He's happily married with children. Ekerete wants to be remembered for his spirited contribution to the development of new thinking and innovative solutions in the insurance industry in Nigeria. In his words, the future of insurance in Nigeria remains potentially strong, and in my view, would require more regulation and digitization to expand the market for operators and investors while deepening the trust of policyholders through positive actions on claims and innovative contracts. That is Mr. Ekerete. And so good to have you here. You know, Mr. Ekerete, you're one of those people that you just inspire when it comes to insurance. You might not know this, but you know, every morning I go on LinkedIn and I see your post with that hashtag in my campaign NG.
Oh, wow.
It just, you know, encourages me to keep going. You're just such an amazing person, and it's so good to have you here.
Thank you so much.
You're welcome.
Nice to be here.
Yeah, so next we have Katie Kuzwayo. Katie has been in the insurance industry for about 10 years. She has worked in various roles like claims and risk management. In 2020, she joined Liberty Health Insurance South Africa, a health insurance company that provides health insurance in Africa. She now focuses on stakeholder management and business development. Kate and I met on LinkedIn a couple of years ago. And we have had several phone conversations, and almost half of our conversations end up being about insurance. Yeah, Kate and I share the same passion of wanting to educate Africans about the importance of insurance. And I'm just really glad that she accepted to be here today. Thank you, Kate.
Thank you for having me.
Yeah. And next we have Mr. Rodwell. Mr. Rodwell's journey in insurance began about 17 years ago. He started off as a graduate trainee and transitioned into the role of deputy manager. Rodwell co-founded Hollard Zambia in 2010, and is currently the chief executive officer of Hollard Insurance in Zambia. He holds a bachelor's degree in business administration, a diploma in insurance studies, a certificate in commercial wording, a master's degree in business administration, and has recently obtained a diploma in teaching methodology. He is an associate of the Chartered Insurance Institute in the UK. Rodwell is passionate about insurance and is keen on teaching and educating others about insurance. Super excited to have you here, sir. We both share the same passion, and I believe that is why we're all here. So thank you all for being here.
Thank you for having me.
Yeah. All right. So I'm just gonna go through this quickly. So as I mentioned earlier, hopefully this session is just going to be really relaxing. We're just going to, laugh out loud if we need to. If you're answering the questions and you feel like you need to tell a joke, that is welcome. You can tell all the jokes. That's it's welcome as well. And so we're just here to have fun, and we're going to go right into it. So I'm going to start with the very first question that we got. And the question says, can an insurance company assist one in starting a business? And this is from Jessica in Nigeria. So Mr. Rodwell, do you want to go first?
Yes, I can take that question, then my colleagues can add.
Yeah, for sure.
I think for me, in terms of how insurance can help someone starting up a business, should be looked from the aspect of risk management.
Mm-hmm.
So any business passes through several stages. So one of them is the startup. When you just start up a business, up to maturity and you harvest, there are several stages there. And in each and every stage, there are risk exposures that, if they are not managed properly, can actually undermine the very existence of that business. So insurance comes in that it will provide the transfer mechanism, in that instead of the people that have started up that business worrying about the risk that they are facing, which is actually something that can lead to losses and closures, insurance will come in. So much so that if you are faced with a risk in your early years and your business is affected, so instead of you losing out, and so that you start thinking, where are you going to get capital again to start all over again? Insurance will come in, pay off those losses, and you continue operating. Simply put, it stabilizes the business as you start. I think in simple terms, I would like to introduce it like that, then my colleagues can pick up from there.
Thank you, Mr. Rodwell. Kate, do you want to go?
I just want to add that explicitly, answering the question, insurance cannot help you start a business as such. However, there is insurance, there is business insurance that is available in the market should you want it for your business. So that's how I would position it. And I mean, obviously, it doesn't really cater for only large businesses. It covers from small, medium to large businesses. So the product is available in the market if a person wants to insure their business.
Thank you. Mr. Ekerete? Mr. Ekerete, can you hear me?
Yeah, I can hear you now. It's just been fluctuating, but it's fine. Yeah.
All right. Do you want to go after Ms. Kate?
Okay, I didn't quite hear her about Can you take it again?
Oh, so we're just answering the question. So they're just answering the question that says, can an insurance company assist one in starting a business? So Mr. Rodwell went
Oh, my,
first. And
the
Ms.
network at my
Kate?
end is fluctuating.
Oh, okay. Yeah, so do you have anything
I didn't get that.
Do you have anything to say in regards to that question? Hello?
Yes. Do I have anything to say?
With regards to the question, can insurance help one to start a business?
Oh, wow. Can't hear you.
Oh, okay. So I guess we'll just wait while we're waiting for Mr. Ikiriti. Maybe Ms. Chilufya, do you want to go?
Okay. Thank you so much. And thank you for having me here, and good evening to our viewers. As alluded by Rodwell and Kate, I think it's very clear. So to Kate's point, insurance in a way would not help you start up a business. However, to Rodwell's point again, it can help you to mitigate for risks due to unforeseen and unexpected financial shocks. And so when we look at the question maybe would be, do businesses need insurance? And yes, the businesses would need insurance, because then it helps you to cover for the costs associated with, say, your property damage and your liability claims. And without business insurance, so the business owners may actually have to opt to pay out of pocket for costly damages and legal claims against their company. So if you're starting a company, insurance is often also required by prospective clients, and it is therefore important to have fast, effective cover in place. Thank you, and over to you.
Thank you so much. So Mr. Ikiriti, do you want to add to the,
Okay.
Do you want to go now? Hello, sir? I don't know if you can hear us.
I think he's having some challenges.
Yes, he's having issues.
Yeah. Okay. I think his network is okay, so I guess we'll go to the next question, and when his network is back, we'll just kind of maybe revisit and hear his view. So we're just going to go to the next question. So the next question said, how is it possible for two insurance firms to undertake an insurance cover? And this is from Andres in Equatorial Guinea. So Ms. Chilufya, do you want to go first?
Okay, that's fine. As I sat here and looking at the question, I actually said, okay, there's two ways to eat. So it's perfectly legal to have two insurance policies that are running on an asset, and the law applies in different ways in different states again, or the jurisdictions. Yeah. And I have to look at it and I say, okay, if you're running two insurance policies, what would the situation be? So it could be that you have a concurrent insurance where you have two insurance policies that are held to cover the same risks over the same period. This often means that the first policy is deemed as a primary policy, with the second one only meant to act as excess coverage. However, there's also an aspect of double insurance. And without full disclosure of the material facts, if there was a claim that might arise, it means that you may actually have challenges in understanding which policy pays. So the two underwriters may actually have a challenge in understanding which of the policies will pay. And in most cases, they may actually opt to meet each other halfway, or they may decline to accept that claim. So that means that there should never be a point in time when the insured is buying double insurance with a view of defrauding the insurance process. And that is mostly common in short-term insurance. And I sat here and I asked myself, in Zambia, we are actually asked to display the insurance disc on your motor vehicle, for example. How would you display two insurance discs on the same vehicle. It's practically impossible.
Yeah.
However, in life assurance, one can buy as many life policies as you can, depending on your financial capacity to pay your premiums, as they are long-term in nature. So I thought the two would actually go through, but it's quite interesting. For life insurance, buy as many policies as you can. Can you afford? Can you sustain the premium payment for a long time? If you can, then go ahead and do that. And in the event of a claim, death or anything, then the two policies are actually called in and they will pay the policy payout. Thank you.
Perfect. Thank you so much, Ms. Chilufya. Mr. Ekrete, can you hear us now?
Yeah, I can hear you clearly.
Okay, perfect. Do you want to go after Ms. Chilufya to answer that question?
Yes, and I will answer that question with an experience we had some years back in Nigeria. And it was interesting because this individual knew that he had a terminal disease, which was not known to the insurance companies. He actually went ahead and took insurance policy with about 8.
No, it's not work.
It's frozen again.
Yeah.
I think we've lost him again.
You know, so
Okay, he's back.
he went ahead to take 8 policies with different insurance companies.
Wow.
When he knew that he had a terminal disease. Now, the interesting thing was that the insurance companies, most of the insurance companies were relying on a particular hospital. So there was a connivance between the policyholder and the hospital to give him a clean report.
Uh-oh, I think we lost him there again.
Yeah.
Okay. Okay, I guess we'll just move on, and then when he's back, we'll have to maybe revisit it later on. Mr. Rodwell, do you want to go next?
Yeah, so as Chilufya was speaking, so I was wondering what else I would say, because
yeah, it's like she said everything, right?
everything, yeah. But I think just to sum up what Chilufya said, it's possible, and in my mind, I'm thinking there are about 3 scenarios where you can have maybe 2 insurance companies insuring one property. And I'm restricting myself to general insurance. So obviously the first one is what Chilufya mentioned. There are instances where one policy is referred to as a primary policy and the other one is a secondary policy. But obviously in all this, the principles of insurance, the indemnity should be adhered to, meaning that the client cannot benefit more than the lost before the loss. So the first policy, which is considered a primary policy, should trigger effect. And only after it has been exhausted, that's when the second policy will come in. And so in this case, up to the maximum limit contained in the first policy, that will be deemed as excess on the secondary policy. So that's the first scenario. But in all this, when you add the limit on the first policy and the limit on the second policy, the total value should not be more than the value of the property. Otherwise, the client is going to benefit. The second scenario I'm thinking is co-insurance, which is very legal, where for large risks, we encourage that we share risks. And so what should happen there is where the client is aware that I've got 2 insurance companies that are covering this risk, so that together they are pooling their capacity so that they can be able to take on my risk, and full disclosure is made. The third scenario is a pure double insurance. And the double insurance can be acceptable and can also not be acceptable. And I think Chirufia really explained in details. I think the scenario I wanted to give is that some years back, I took up home loan with a named bank in Zambia. And so because I was in my mid 30s, so I was excited about the house. I didn't even read the terms and conditions of the bank. And so I didn't know that the bank had taken up house owners on the house that I had bought. So on the other hand, I also bought house owners policy. So in that instance, it's a double insurance purely out of ignorance. I didn't know that the bank had taken up cover. I also took up cover, meaning that in an event of a loss, the two insurance companies will get to know that there are actually two insurance companies that are covering the same risk. And what normally happens in practice is that the principle of contribution will come in. So we are going to look at what was the sum insured that the bank used to insure this property belonging to Rodos Kazwe, and how much did Rodos Kazwe insure. If the values are the same, then in terms of contribution to the claim, it will be 50-50. But of course, subject to individual terms that are contained in these two separate policies. But of course, the other scenario, I think, is the one that my brother from Nigeria wanted to give us an example where, out of fraud, someone wants to be smart and places insurance with several insurance companies, so much so that should there be a claim, he would want to defraud the insurance industry by going around all the insurance companies and claim. So, of course, yes, if they are clever and there are no mechanisms to catch them, they can actually go undetected. That's why, as insurance companies, we should always be aware about fraudsters, and we should put our systems in place and in check to ensure that any slight sign of fraud is detected as early as possible. And the insurance companies actually should coordinate. That's why when you go to developed countries like UK, you find that as an industry, they've got a database. So if someone wants to defraud, there will be a red flag and they'll easily detect. But unfortunately, in developing countries, you find that a lot of insurance companies do not cooperate. So how do you even start coming up with a centralized database if you don't look eye to eye? So that was the addition I wanted to make to what Chirufia said earlier. Thank you.
That's fantastic. Thank you so much, Mr. Rodwell. Mr. Ekerete, sorry about the disconnect there. Do you want to go ahead and answer the question?
That's okay. I think Rodwell captured what I was going to say, because this guy that took the policy with 8 different companies was with an intent to defraud. And unfortunately for them, they were too fast after the family members were too fast after the guy had an accident, which was also suspicious, and died. So they moved immediately to try and make claims from these 10 insurance companies. And unfortunately for the insurance companies, they were all relying on a medical health center for the results, the test result that the client took. So it was, though it seemed easy for the client for the policyholder to try and defraud, but I tell you, it became a court case. The family took the insurance companies to court, and ultimately it was established that the guy took the policies with the intention to defraud, and that's why it was not honored. So those kind of things happen, but thanks to technology today, I do believe that with better connection and better sharing of data by insurance companies, you'll be able to dictate such things before they go too far.
Perfect. Thank you, sir. Ms. Kate, do you have anything to add to everything?
Oh my goodness. My colleagues on the call have covered everything. But I just think what's worth mentioning and emphasizing is that in the event of a claim, the insurance companies will all know if you have taken up insurance for the same item with different insurers. Because like Chilufia was saying, that in Zambia they have a system. SA as well, we have a system. There's no way that you can miss it. So for the people out there who are watching, who are thinking of trying something like this, it's not a good idea. Don't even start.
All right. Well, I hope everyone is listening to what you guys are saying. If anybody has an intent to defraud an insurance company, well, unfortunately, you will be caught. So don't try it. All right, so we're moving on to the next question. The next question said, why is it that insurance practice is not the same all over the world in terms of practice? And this is from Ramiro, also from Equatorial Guinea. So Mr. Ekerete, do you want to go first on this one?
Oh, yes. Thanks so much for this opportunity once again. I do think that contrary to the view that they're not the same, I do think that insurance is the same. They've got the international standards that all parties follow, essentially because you're going into a contract with a company, and it simply says, in the event of a loss, we will be there to compensate you. And then there are different terms and conditions to this based on the environment. But by the principle, it's just basically the same all over the world. Right. Now, what you will find is that in different environments, because of experiences, and that's what insurance has been over the years, insurance tends to follow. When things happen, we then learn from that experience and prepare for the next experience. However, today with InsureTech, we do know that we can make some predictions and be able to take some position before the clients even come, having known what the environment is. So I do think that basically the same elsewhere. If you have not enjoyed what from insurance, what you see elsewhere, then it probably has to do with your environment not being advanced or matured enough to get that yet, both in terms of policies and in terms of regulatory guidelines. Thanks.
Thank you so much for that fantastic answer. Ms. Kate, do you want to go?
Oh, well, thanks, Judith. I think to add at what Mr. Ekerete just said is that the principle for insurance is the same globally. And that is just to put the member, or rather the client, in the same position they were before the loss. And then just growing from there, obviously the environment has become highly regulated, simply because, like Mr. Ekerete mentioned, that because of past experiences, right? So the industry has evolved, and there's a lot of legislation that's come into place, but I don't think that it's too far off. Obviously different countries vary, they vary, but it's not too far off. The principle still remains the same.
Perfect.
Thank you.
Thank you so much. Mr. Rodwa?
You're speaking on mute, Rodwal.
Yeah.
Technology. Yeah, I was saying, I think I do agree with the previous two speakers. Generally speaking, when you are talking about basic principles of insurance, if you are in Zambia, you are in the Philippines, you are in Ghana, Nigeria, the meaning of insurable interest, utmost good faith is the same. But obviously, to concur with the person who sent that question, that when it now comes to the moment of truth in practice, we tend to see slight differences, even if we are using the same principles. And for the most part, these differences could be as a result of a number of things. And I think I'll cite about two or so. The first one is the maturity of the market. I think we are at different levels. When you look at the insurance market in America, insurance market in Canada, Zambia, and the like, definitely because we are talking about those that are really mature markets compared to those that are still developing. So you may find that in terms of practice, there might be slight differences, notwithstanding the fact that we are all using the same principles. And then also you look at advancement in technology generally as a market that can also influence how insurance is delivered. I also think that government involvement can also be a trigger as to how the differences come about. Because if the government is involved, you find that there will be certain directives that are given to the insurance industry, and end up doing certain things that ordinarily, if you are to interpret the basic principles of insurance, maybe you are not supposed to do them, but you end up doing because you need to comply with the local regulation. So in a nutshell, there shouldn't be differences, but yes, those differences will be seen. But I still think that they will not be far apart.
Thank you so much. Ms. Chilufia?
Thank you. Thank you so much, Rodwell, Kate, and Nikita. So very clear, the principle for insurance remains the same across the globe. And just my addition is that sometimes as policy users or the customers, what you think is making the policies different or the insurance practice different would maybe look at the policy structures, because what you get from one insurance company may be different when it comes to accessing the same type of benefit with another insurance company. More because adaptability of the benefits has now been either it's localized, and you'll find that also when it comes to application in different markets, you will always want to align to the principle of treating the customers fairly. And you also want to co-design some of the products with the customers because you want them to meet the customers' needs. And so you find in turn, the customers think what I'm accessing at point A and with insurer B is different. But ultimately, just to put it across that the principles of insurance relatively remain the same. In life insurance, we always say, when you're buying an insurance policy, you're mitigating for a risk, right? Mm-hmm. And so if I am buying a shelter when I buy home insurance, I am buying a comfortable life, retirement life when I'm buying a personal pension plan. So ultimately, it's really understanding those needs and tying them back into the benefits that are applying across the different products. And at times, it's that applicability that makes them think the practice is actually a different practice, but it's basically just the same. Thank you, and over to you.
Great, thank you so much. We're going to move on to the next question. The next question says, are insurance companies required by law to refund the insured all premiums paid in the event that a claim is being rejected? This question is very interesting, and I can't wait to hear all your answers. This is from Boitumelo in South Africa. So who wants to go first on this one? Okay, Ms. Kate, do you want to go first? Somebody from South Africa is asking this question, so let's hear your answer.
So obviously, no insurer wants to would refund you the premium when there's been a rejection, and I'll tell you why. Because insurance is a relationship. When you are paying a premium, you're transferring your risk from yourself to the insurer. So in the event that the claim had been valid, the insurer would have compensated and put you in the same place that you were prior to the loss. And I think we should just take a step back and just speak to what are the causes, or rather, what are those indicators that cause and that make an insurer not to reject your claim and not pay it. And like we've just been speaking, fraud has been coming up, because if the insurer feels that you may have acted fraudulently, they will reject your claim. And also, if you have not fully disclosed all the material information applicable for your policy, that is also a possible cause of a rejection. You know, I'm just naming a few, but it is important that, you know, people know that in the event, if they feel that they're not comfortable with the rejection decision by the insurer, then they should write to the insurer's complaints department and just advise them that they're not uncomfortable, they're not happy with the results, and these are the reasons why. And because after that, if you're still not happy with the reply that you get, then you take it up with the ombudsman. Obviously, which is the arbitrator. Different countries call it different names. So, you know, those are the steps for the person to follow. But just in answering the viewer's question from South Africa, it is no. The insurer would not consider refunding you in the event your claim has been rejected. And I think it's also just important for people to understand their policy wording or their policy conditions. Right. And just read through it. When you get that policy, read through it, because at times, you know, these things are caused by you haven't fulfilled the requirements of your policy, you know? So there's a lot of factors that go into this that may cause for a claim to be rejected, and which one can mitigate, you know, can avoid from happening. So I think just a person going through their policy wording is the first step. Thank you, Judith.
Thank you so much, Ms. Tulufia.
Okay, thank you so much. And Kate has put it quite well. But I'm going to reference to life insurance. So a premium is refunded where death occurs because of suicide, and if remains within the conditions provided by the policy. Again, we are guided by the policy terms. We can't run outside the policy terms. But in most cases, when you look at life insurance policies, there is always a waiting period of either 2 to 3 years, depending on the policy terms and the conditions. Only accidental and normal death causes are covered. So if you are planning on committing suicide, you're going to have to wait for 2 to 3 years before you can do that. And only then you qualify for a full benefit payout. But within that period, it's a waiting period. The insurer will simply refund the premiums that you have paid. So tough luck, whichever way, you won't be paid. But if you are waiting to commit suicide, so maybe 3 years later, but who keeps on to that to that notion and belief that I should do it after 3 years? So ultimately, there are policy terms and conditions that apply. And to Kate's point, it's very important that we get to reference the T's and C's for each and every policy that we acquire. Thank you.
Thank you so much. Thank you so much. Mr. Ikrete.
Okay, so I will address this is one of the most interesting questions I have heard in recent times. And this has a lot to do with customers' expectations, you know. But I would say the person asking this question is probably thinking, I went to the market, I bought something, and I found out I didn't like it, so I'm return my money. Okay. So, but this is not like that. So this is something that you go into as a contract and all of that. But let's look at it in view of the changing behavior of customers. Now, let's look at this as this is what this customer expects. Okay. If you think back, you recall that until Takaful came on board, people kept asking the question, if I pay my premium and throughout the year, I don't have any claim, what happens to my money? All right, we've explained and all of that, but Takaful came in and in some way has addressed that question of, so I paid my premium and nothing happened, by the fact that, I mean, Takaful companies share surplus at the end of every year, all right? So we need to begin to look at these kind of questions and ask ourselves, not just running back to what the policy has said, but how do we, you know, respond in such a way that customers are encouraged to look at us as willing partners to help them live a better life than just saying, oh, this is what the policy said. And so because the policy has said this, we cannot do anything about it. For me, it's a question that, should turn in a strategy discussion, and let's begin to find some reasonable answers around it, and maybe create policies to be able to satisfy some of these expectations. Thank you.
Thank you so much. Mr. Redwell?
Yeah, you see the beauty of speaking last, you summarize what everyone has said.
You take the shortcuts.
So I think I'll start by responding like this, that the answer is actually yes, because we need to look at the question in perspective. I say so because if, as an insurance company, you may sell a product to a client believing that I'm covered for A, then an A event happens, the client comes to you to claim, and then you say, actually, we are covering you for C and not for A. So if the client can prove that you actually misled them, you missold, I think under any law, they can claim for a refund. That's my first answer. Then the second answer is a no. It's a no in the sense that the reason why a claim will be rejected, in my mind, I'm thinking it will border on two things. Either it's falling amongst the exclusions that are contained into an insurance policy, which is a binding contract, where two parties came together and entered into an agreement. So it will spell out what is not covered. Therefore, if what is not covered, which you are even aware of from the time of buying cover, a loss happens that relates to that particular exclusion, and an insurance company says, we are not going to pay because it's not covered, there is no way you can then start demanding for a refund of premium. The other instance could be a breach of a condition, which in insurance terms or language you say a condition precedent to liability. So you've breached a condition, and therefore it's a condition that is more or less like a warrant. You breach this condition, and therefore it has prejudiced the insurance company. They will not be able to pay. But to conclude, Judith, I'm also thinking that why would you want to cancel the policy because of one claim that has been rejected when your insurance policy is still running? Are you telling me that you are very sure that there will be no other covered events that will occur as the policy continues? So you should continue because the policy is still in force. It's on that at the particular moment, the claim that you are pushing is not covered. So I think we should also bring in the issues of legality here. Insurance policy, like I said, is a legal document, is binding. And I think it is important that both clients and the insurers from the onset, they understand what is covered, the terms and conditions. The issue that we have, particularly here in Zambia, speaking for Zambia, normally our insuring public do not spend much time reading the documents. They get to know about what is not covered at claims stage, and this brings about frustrations. Thank you.
Yeah.
Just also would like to add that, the narrative in the market is that insurance is here to make money and not pay claims, and that is not the case. People should know and be well informed about, the process which they need to follow in order to lodge a complaint when they're not happy with the outcome of their claim, and that just helps because, we've seen various cases where when certain claims have been rejected by the insurer, but when they go to the arbitrator, the outcome is very different because the arbitrator views it not from the insurer's perspective, but from both sides. And TCF is what is really driven in our industry at the moment. We work and we pride ourselves that we are treating our customers fairly, but also the customer needs to know that, at times the the policy document, the policy conditions, you know, guide us in us making those tough decisions that may impact them negatively.
Simply put, to the insuring public, insurance does not cover everything. So when there's a claim, expect either a payment or a rejection because it's not covered. But what is important is that we should stick to what is in the policy. So the policy should guide us because that's the agreement that we went into. If it's not covered, it's not covered. But if it's covered, it should be paid. And in my mind, I'm thinking that's where the issues of treating clients fair comes in, because we shouldn't take advantage maybe because the clients do not understand what is covered. If it's covered, because I'm saying this because sometimes you find that a direct client will have a tough time to make a claim. But if he goes through the broker, the same claim that the client was having a tough time with, it will be paid easily through the broker. So that should not happen. What is payable should be payable, whether for a direct client, for a brokered client. If it's not payable, again, it's not payable. Likewise, we should not treat these two lines of business differently. I see it in our market to the extent that I know, Chirufia, you should not punish me after this conversation. In Zambia, actually, we've got a phrase that every claim through a broker is payable. So it shouldn't be like that. I think also direct clients should be helped, but only to the extent that the loss is covered.
All right. Mr. Equity, you want to say something?
Yes, please. I would like to jump in here and remind us that as we speak about insurance being a contract binding on both parties, one thing that has bothered my mind and for several years has been the fact that, like Rodwell said, policyholders don't read their policies, you know, and it's the same situation that we have in Nigeria. One of the things I had thought of in trying to address that problem is, can there be a way for policyholders to sign the contract document, to sign the policy document? Because the policy document is usually prepared by the insurance company and delivered to the policyholder through the broker or directly to the policyholder. He never has the time to read it. You expect somebody to read something that you have bound and sent to him, signed and sent to him. Sometimes, in the course of changing the way we relate with customers, maybe we should think of asking them to sign. If they are asked to sign, that would be a point where anybody will want to read before signing. You know, this is something I've been thinking of, but it looks like it's not allowed by law, and I'm still looking for that law that doesn't allow that to happen. That's how we have met it, and that's how we have been practicing it. And we keep complaining that policyholders are not reading their policy documents. And when they say claim, some policyholders are just seeing the aspect of the contract document for the first time. You know, so yes, you can blame them. However, if our service is spent in the experience and all of that, I think we should find a way of addressing that. Thanks.
Yeah.
Fantastic.
Yeah, just to wrap up, Ekiti reminds me of a situation where actually insurance companies have had to prepare a policy document acknowledgement slip that then just shows that you have read and accept the policy terms. Of course, we can't run away from the fact that at some point the customer may not be able to read through everything because also it's bulky. So from the insurance perspective, then we need to find a way on how we meet the customers' the deficiencies, and that's to ensure, especially with the digital world now, when you think of distributing digitally, I don't think we will be able to attach all those policy wordings. So as things change, we will also need to actually evolve and meet the customers at point of need. Thank you.
Thank you so much. This particular question has definitely raised more questions that we need to tackle in our next session. Thank you all so much for your answers. We're going to go next to the next question. The next question says, now that banks are offering insurance services, would there be a need for insurance companies in future? And this question is from somebody in Zambia, and Namakao. I don't know if I pronounced that correctly. But I also find this question really interesting because I think it's basically asking what is the future of insurance companies? If other organizations or other industries start to offer insurance, then what is the future of insurance, the insurance company? So I'm really interested to hear your answers as well. Mr. Rodwell, do you want to go first this time? So that you don't have to summarize what everyone else has said.
Yeah, I can go first. Really, for me, I don't see, I do not see banks as a threat to insurance. If anything, I see them as providing complementary service to insurance companies. Simply put, and also maybe to give an example, it's like the mobile money business that has actually come on board. Everywhere you go, you can easily transact. The fact that we've got mobile money services everywhere does not mean that one day we are going to lose banks. Banks will still be there. I think what they have done is just to complement banks. So I also think that banks are merely complementing traditional insurance companies. And also, if you look at banks, especially when it comes to bank assurance, I think the products that they are interested in are products that will, for the most part, speak to the type of clients that they have. And I think they are straightforward products. You still have those complex risks that requires detailed expertise and knowledge from traditional insurance. So in my mind, I'm thinking that banks, like for Holland, we view them as partners on the distribution leg. They are providing us with that, and we ride on them as a distribution channel. And it becomes easy because for them, they can easily catch the fish because they own the pond, right? So we leave those lines of business that can easily be gotten through the banks, whilst we concentrate on other lines that banks will, for the most part, either not have access or they will not have expertise. So they provide complementary service, and therefore there's no threat from insurance companies, and they should not be scared that the banks will take up their role. We are complementing each other with banks.
Thank you so much. Mr. Ekerete?
Okay, so we actually did have some experience in the past when we were practicing universal banking system in Nigeria, and banks were allowed to own insurance companies and take interest in insurance companies. That experience was a very tough one for the insurance companies, I must say, because the banks now had to set up their own insurance companies. And just like Rodwell said, when they needed to get insurance policies, the banks just used the insurance companies just used the banks as channels to obtain insurance policies for their customers. However, the banks now discovered that insurance was not banking, because they just couldn't believe that you will be taking a premium of 10% of an amount for a highly valued property or a highly valued transaction, you know. And then when it comes to paying claims, they just couldn't stand that. For them, it was a no-no. Why would you pay someone such huge amounts, you know, for the little amount that the person paid as premium? So my take is that banks and insurance companies have come to realize that they have different roles to play for the customer. All right. So the security of the asset is that of insurance to do. Is that of the bank to now say, I want security for this asset because I'm probably the one providing the credit, the funding for your project. So I want to make sure that the investment is secured. But having said this, just to let the person asking this question understand, it's not just banks, you know. So we have bank assurance, the health sector. You also have health insurance. We have agri insurance. So insurance is actually in every aspect of our lives. We have travel insurance, you know, so you should rather see insurance as something to embrace, not bothering himself about whether banks are going to take over insurance. No, banks are never going to take over insurance. It's not their turf. Thanks.
Perfect. Thank you, sir. Ms. Chilufia, do you want to go?
Very, very well put by Ike today, as well as Rodwell. So insurance companies will always exist in any economy, and they cannot be put away by any banks. We just need to understand that there are various reasons why anyone would go into a partnership. And most of these would actually speak into how, when we look at insurance, we always talk of low insurance penetration rates, lower contribution to GDP, and then we focus on traditional distribution channels, which we have seen that is not creating value for both the client as well as the insurance company itself. How then do we look into partnerships so that we find a cost-effective way of distributing that insurance product, how we pass on the benefits to the customer, create the values for the client, create this customer seamless experience when it comes to distribution and all that. So I want to mention that with the fourth industrial revolution, we will actually see more partnerships go beyond bank. And because the traditional way of distributing insurance is not sustainable. So insurance companies will actually need more partnerships to drive economic growth and value. Thank you so much, and over to you, Judith.
Thank you, Ms. Kate.
Oh my goodness, what is there to say? When everybody's just said put it so well, you know? So, I mean, like my colleagues on the call are just saying, you know, obviously this whole distribution channel was developed also just to meet and to, you know, because to get certain consumers, right? Because of the various products in the market. So there's a product for everybody. And not all products that are distributed by the bank would be suitable for the other consumer. And that's why the traditional insurance companies will always exist.
Yeah.
I just would like to put that in closing. Yeah. Thank you.
Thank you so much for all the wonderful answers that you've given. We're going to go to the next question. The next question is from James in Nigeria, and he's asking, how does insurance companies help the youth? Mr. Ekerete, do you want to go first on this one?
Okay. For the reasons that we have, we probably have the largest youth population in Africa. The guy is asked the question that I find very, very intriguing. The other way of putting the question to also answer it is, what do the youths need help for? Okay, so the youths need employment, and insurance, in my own view, provides the largest opportunity for employment, because you would not know how many people started their lives as insurance agents before they found their way into the formal, real employment. And so insurance still provides that kind of opportunity for them. So let James know that employment is one major thing that insurance does. And also, it provides career opportunities in high income earning areas. I mean, across Africa, we can almost count the number of actuaries that we have. And we need a lot more than we have. So I mean, the kind of career you want to go into, actually, I would recommend any day, you know, for anyone. And then for the youths who are also into entrepreneurship, that's the part I like. You know, I always describe it by saying you may run to the bank to open an account, but you soon find out that you needed to have an insurance account before you went to the bank, because as the insurance business evolves, we will begin to see how small businesses will use their insurance policies as collateral. All right, and so young business people, I find out today that a young person values his own phone more than even the house or car. So he needs the insurance cover for his phone. And that is where the insurance companies, especially in Nigeria, have to do a lot of work. Because sometimes when you ask for insurance for just your phone, you'll be told that, oh, why don't you add it to your office insurance? Why don't you add it to your home insurance? Because we wouldn't be able to give you cover alone. I say, no, let the guy know how much you want him to pay, and you'll be surprised the guy will pay, you know? Yeah. So there's a lot that insurance can do for you, but I think I'll just leave it here and allow other people to speak. Thanks so much.
Thank you, sir. Ms. Kay?
So, thank you, Judith. And I just would like to speak from the South African context. So, you know, insurance companies in SA, you know, speaking to the previous speaker's point, they really do provide employment. So the insurance companies in this side, you know, they provide learnership opportunities. And learnerships are just those opportunities that are able to capture those youth that just come out of school that haven't gone to university or don't have the funds to go to university. So those learnership opportunities allow them to go into the industry and learn and provide them opportunity. You know, it's necessarily not a given that the person will get employed by that insurer after their learnership program. However, most of the time they make and they create opportunities or positions for those people who have been on this journey on a learnership. Secondly, they provide graduate programs for youth that have just come out of university. So it allows the youth who just came out of university, be it regardless of which areas of study, to come in, and they put them in different departments where they feel they will add value, or where they'll learn and grow and gain experience. Also, you know, there's a lot of initiatives that insurance companies are involved in, like helping children from disadvantaged areas with learning of maths and science, you know, providing those programs to equip them and help them to be strong in those studies, so that, you know, they can go to university and further their careers, etc. So there's a lot, you know, which is happening in the SA market that is helping the youth in terms of their development, where youth is they're not only just sitting at home and have to complain about no employment. Opportunities are available, but they're only available for those who want them. You know, that's something that we also need to say, that, you know, if you want an opportunity in the insurance industry and you're probably watching and sitting at home, then it's important for you to look what is available, surf the internet. Everybody has a gadget, everybody has a phone. So the opportunities are always coming up, right? You know, and that's something that, you know, is currently happening in the South African space. Thank you.
Thank you so much. Mr. Redwa?
Yeah, I think my two colleagues have already spoken to this question. Obviously, speaking generally, the first opportunity for the youth that they can tap into the insurance industry is job creation. There are opportunities there. But I also wanted to, I think it as in a way mentioned, I wanted to just bring the issues of corporate social responsibility. I think as youths, what they should be doing is to check these insurance companies. What is their strategy on corporate social responsibility? Because at the end of the day, the corporate social responsibility has become a big thing world over. And so each and every insurance company, like any other companies, they want to be involved to see what can they plow back to the community. So it's at that stage that the youth should be able to marry their initiatives to those strategies that companies have, so that they can be funded for those strategies. So the issue will be where, as a youth group, you just come up with an initiative, then you rush or run to the insurance company for assistance without understanding that company's strategies and vision. So they need to first understand that company's strategy and the vision. Do they want to plow back in the community in terms of learning to Katie's point, or is it that they want to concentrate on health? So as youth now in that community, come up with an initiative so that the insurance companies can come in, help you, so at the end of the day, the entire community benefits. In fact, it should be beyond the youths. The youth should just be the engine through which the community benefits from the insurance industry. Thank you.
Thank you so much. Mr. Lufia?
Excellent. Thank you to all the speakers. And I think from my side, it's really to say, I started off my career as a life sales representative. So there's always room for everybody. There's always room for everybody. But to Kate's point, it's really you identifying that opportunity and being able to actually raise your hand and say, I want to learn. How do I get it right? And to Kate's point again, it presents a lot of opportunity. However, when on the flip side of the business itself, in life insurance, we always say the younger you are, the cheaper it is to actually buy life insurance. That's what it is. So, because most of these life policies are age banded and they work on a flat rate principle. So you find that it's very cheap to actually access these insurance policies as well. But a lot of times we think insurance is not something that I need, or life insurance is not something that I need. So to the youth that is listening, there is opportunity for you for growth, and you can also access that benefit early enough in your career. You don't have to wait until you are over 30, over 40 to begin to buy a life insurance policy. Get it as soon as you get your first job, and you find that you will have a level of premium, and your premium will never change unless you have the inflation fighting escalator. So it is actually cheaper and designed for you. So you take up that policy, you have it in long-term nature, and it benefits you at a given point in time. Thank you so much.
Wow. Thank you. I also wanted to contribute something with regards to careers in insurance. I think mostly in Africa, we're so focused on being a lawyer, being an engineer, that we don't explore other opportunities. And it is amazing how many opportunities there are there in the insurance industry. And I'm hoping that people that are watching this will be able to go out there just by watching this to go and explore those insurance opportunities. Thank you all so much.
I actually would like to add, now that you just mentioned about those careers, about being a lawyer, there is a place for lawyers in insurance.
Exactly.
There is a place for engineers in insurance. So, exactly. I mean, people seem to have a perception that insurance is just about cars or selling insurance. That's what we do. But there is obviously those experts in the background who are working at providing that product at the end of the day. Yeah.
Thank you. Thank you all so much. We're going to go to the next question. The next question says, what are some practical things I can do to lower the cost of my homeowner's insurance? And what factors should I consider when purchasing homeowner's insurance? This question is from Abimbola in Nigeria. I think this question is two questions in one. One is saying, how can they lower their homeowner's insurance? And one is saying, what are the factors to consider when purchasing homeowners insurance? So, Mr. Rodwell, do you want to go first?
Yes, I can. I actually think that is one question.
Okay.
Because I think, broadly speaking, it's about rating factors, what we call rating factors in insurance. So whether it's homeowners or it's motor vehicle, they are rating factors. So these are factors that will help the insurance company determine whether the risk is low, is medium, or is high. Obviously, we are saying for very high risk, it's undesirable on the part of the insurance company, because the losses are actually obvious, and we don't provide insurance for obvious events. If we know that's going to happen, then we are not going to give you cover. So these rating factors, they are quite a lot, but it would depend with the product. For instance, for homeowners, you should look at factors such as the location. There are certain locations where even if the insurance company gives you cover, the rate will be very high. Why? Because in that area, for instance, if it's rain season and there's a flood, you know that there will be issues. Or when it comes to theft, you know that there will be issues in that location. Or if there is fire, you know that the fireman will not find the way to that house. So definitely, the insurance company will have two options. It's either to completely decline to give you cover, or if they do, then there will be high premium and other high terms. So obviously, when you are purchasing a house, you should look at the location. And then there will be other factors also that you take into consideration as an underwriter. Others will be the fire suppressors. So if you've got fire suppressors at the house where you are located, or other factors such as the standard, the construction of the building. So in insurance, we say the house should be of standard construction, meaning that if it's thatched, for instance, then the rate will be high and you'll be paying high premium. Unless if you can convince the insurance company that, look, even though my house is partly thatched, I've got fire resistant chemicals that were put on the thatch, and therefore, in terms of your worries towards the fire, you should not worry. But otherwise, those are some of the factors that will actually influence the underwriter in coming up with the rate. And therefore, as the owner of the house, if you work around those factors, ensure that the location is good, ensure that the construction is of standard nature, and you've got all these other things that will make the underwriter view the risk to be low, then you'll be paying low premium. If it's otherwise, you either end up in a scenario where you're either paying more premium or the underwriter will just refuse to give you cover. Thank you.
Thank you so much. Ms. Chilufya?
Okay, thank you so much. I think I would touch on the reducing the cost on my homeowners and probably try and give a practical example of what I do. But very important for everyone to understand that you need a checklist when you're shopping around for insurance, and not only homeowners, but for all other insurance policies as well. So what I would call my top 3 priorities would be: 1, never confuse what I have paid for the house with what the possible rebuilding cost would be. Always take inflation into account, because the money that I've paid today to buy my house is not the same that I would if I were to rebuild it. And so the second thing is that I always try to combine my home as well as auto policies and place them with one insurer, because then I can bargain on premium or on price of the insurance. And finally, I think Mr. Skazwe touched on it. It's really trying to see how then you improve your home security as well. So that said, it's important to review your policy limits annually, and to also just try and take the inventory of the things that you have insured. Because sometimes we tend to keep so many things. The list is so long, but ultimately you find that you have cover for things that you actually don't need. So some things may have been damaged during the year or are no longer of great value. Just try and remove them from the policy. It helps you as well. So have the understanding that what is expensive today or what was expensive yesterday may not actually be expensive today. It has decreased in value over time. So try and do those little things. They actually help you to lower your cost on homeowners. Thank you, Judy.
Thank you so much. Ms. Kate?
Well, thank you for the opportunity. I mean, echoing what Chilufya as well as Rodwell had said, I think because the question specifically, well, rather the person asking is speaking on homeowners, also having the right security, you know, having the burglar bars on your doors, on your windows, and also having valid certificates for the installation of your gas as well as your solar, you know, your solar energy. So those can also contribute for you having a lower premium. Yeah.
Perfect.
No, thanks.
Mr. Ekerete? Oh, you're on mute.
Okay, yeah. So, sorry. Thank you so much. I'll try and bring some practical sense to this. Whoever is looking for a homeowner's insurance, I think in Nigeria, for example, should, as much as possible, try to get the insurance company to see your house and know where it's located, know the kind of gadgets that you have put in place, and try and make the point that you have helped the insurance company to lower the risk that they should ordinarily be looking at. And so sometimes when we're discussing homeowners insurance, some people, tenants, you know, tend to confuse what they want to do with those who are actually the owners of those homes. And sometimes you have insurance executives, marketing people who also, due to poor knowledge of the product, are unable to actually distinguish, you know, for the benefit of the customer, which direction to go. So from this start point, I think there is a lot of work that the insurance company needs to do to let the guy going out to know the difference between selling insurance to someone who owns the home and selling insurance to someone who is living as a tenant in the home. Having said that, you now find out that you know, we can sit and agree to give discounts if you have fire extinguishers, if you have some kind of technology that secures you, and if you are living in an estate and not on the open streets in Nigeria, there's a tendency for you to get a different kind of rate. But my point is, most of the time, the insurance companies don't get to see the actual thing that they are providing cover for. And so what you need to do is get the insurance company to see and understand that your house is different from the last house, the last home that was insured. Thanks.
Thank you so much, sir. We're going to go to the next question. The next question says, what is the difference between actual cash value and replacement cost? This is from Abimbola in Nigeria. Ms. Chilufia, do you want to go first on this one?
Okay, I looked at that and I was saying, okay, this is kind of like straightforward to some degree. So when you're looking at actual cash value, it will only pay the depreciation cost and it can save you money on premiums. And then when you look at your replacement cost, this pays for full replacement cost of your asset or items. So ultimately, the client, you will have the choice because you understand the value of your asset and you know to what extent you want to have that asset covered or item covered. So you then look at it, do I want an actual cash value or do I want a replacement cost in the event of a total loss? That's what it is. Thank you. Thank you so much.
Mr. Ekerete? You're on mute, sir.
Sorry about this. I think Chilita has basically answered the question because it's a straightforward one. But the customer's point, from the customer's point, sometimes there is that challenge of really understanding what these terminologies, you know, represent. And so again, my emphasis is let the guy know the difference, you know, not until something goes wrong. You see someone who gives you a schedule of his assets and he has market value, he has different values, and then the replacement cost. So which one are you going to consider in doing the providing the insurance cover? It's important from the beginning to let the guy know, and in the event of a claim, that this is what will happen. Thank you.
Thank you. Mr. Rodwell?
Yeah, so this one quite a straightforward question, obviously to the points raised by my other speakers. So one actually takes into consideration depreciation, which is your wear and tear, the actual cash value. Others would call it market value, as opposed to the replacement cost that will actually take the full value. But for the sake of the viewers, I wanted to just give an illustration. So let's assume you've got a motor vehicle which is insured at $400,000, so at $40,000, and on that policy, it is stated that the claim settlement method is the actual cash value, which is your market value. So in an event of a loss where you are supposed to pay a total, the payout is actually it's a total loss. So what will happen is that the insurance company will have to determine the cost of wear and tear. You've had this vehicle for 2 years. So how much is the depreciation on this vehicle? For instance, if the depreciation comes to $6,000, it means that when they start calculating the payout, it will be 40,000 less depreciation, which is your 6,000, and they will arrive at $34,000. By then, of course, there will be other terms contained in the policy, such as excess. You apply excess, as opposed to replacement cost, where it will be just the $40,000 as indicated to be your sum insured less excess, and you are paid. So there will be no depreciation. So it's the depreciation that makes the difference. I think the challenge coming to practice now, particularly here in our market in Zambia, is that at the time of taking up cover, clients would not know about these things. All we do is we'll ask them what is the value of the vehicle, and they'll tell you it's 40,000. So that 40,000, you don't know whether it is a replacement cost or is the market value. So now the challenge comes up when there's a claim. You start now arguing, and now clients will start calling insurers to be crooks, to get his point. But what should be noted here is that even if you do not discuss it at the point of underwriting, every insurance policy will have a clause that will state the method of settlement. So now the insurers now will go there and say, this is the method of settlement, and we are going to use this method. But now the clients will be saying, no, but at the point of underwriting, you never told me about depreciation. You just asked me about the value of the vehicle. So I think it's also incumbent upon us as insurers to educate our clients at the time of underwriting. Certain conditions of the policy should be made aware to clients as they take up insurance. Thank you.
Thank you so much. Ms. Kate?
I think everybody has put it so well, as it is a straightforward question. What I would like to add to this is that, during a sales call, the customer sometimes gets overwhelmed because the agent on the other side of the call is probably reading a script, and then they're just saying, yes, 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 yes. It's okay for the customer to pause and say, what does that mean? Because at times we use a lot of insurance jargon on our customers, and that causes confusion. The customer may think they understand, whereas they don't. So for the customer watching, it's okay to stop and say, what does that mean? And not just say yes, yes, for the sake of finishing the call and getting that cover. Understand what you're buying, understand what you're taking up, and how the settlement works. Ask those questions. so that in the event of a claim, you know, there aren't any challenges. And yeah, thank you.
Yeah.
And
Perfect.
maybe just to add, Judith, so for us at Holland Zambia, what we've done is over the years, we've observed the pain points when it comes to claims handling, particularly for direct. I think I normally speak for direct clients because they've got no one to speak for them. So particularly for direct clients, what we normally do is that over the years, we've observed the pain points and we've summarized those on a one page and given them to our underwriters so that as they are selling, as they are underwriting, they at least highlight those issues so that the clients are aware from the word go. Otherwise, without that awareness, they're always trouble at the claims stage.
Perfect. Thank you so much. I think you all have said everything. I think it's really, really important for customers to be asking questions, because even as an insurance person, I find most of the wordings are just really, really complicated. So it is very important for customers, for people who are watching, it is okay to ask questions. If you're going through your policy and you see a word that you've never heard before or you just don't understand, it is okay to ask questions. Just make sure if you're dealing with a broker, make sure that you're asking your broker the questions, make sure they're explaining everything to you, and make sure that you understand so that you don't wait until it's time for a claim to start figuring out what does this word mean. Thank you all so much. I do have a question here. I feel like this question has been answered before. The person is asking, are there any other forms of insurance cover? What is known here is car and life insurance. This person is in Equatorial Guinea. His name is Jose. So Jose, if you're watching, I just want to say that there's so many insurance. There is travel insurance, there is house insurance, you know, there's marine insurance. It's like there's insurance for most aspects of our lives. So it's not just car and life insurance. We are going to go to our very last question for today. And the question says, how does insurance contribute to economic development? And this question is from Mbulwe, I think. The person is asking from Zambia. And so we're going to go, Ms. Kate, do you want to go first?
No, okay, well, thank you, Judith. Firstly, you know, let's go back to what is insurance and why do we need insurance? So, you know, we need insurance because we want to be in the same position that we were prior to the loss. You don't want to suffer a loss and you have to pay out of your pocket, because it does occur at times that you do not have the money to do that. And that is what insurance brings to the market, in my view, is the fact that it keeps you at the level, or rather in the position that you are in. So that you, in the event where, even though you do suffer loss, but the comfort of knowing that you have insurance and you will still have your property, or your geyser will be replaced, or your car will be repaired, you know, that comfort on its own, it really does contribute to the consumer as well as to themselves as their own standing in the economy. I'll allow for my other colleagues to further expand. Thank you.
Thank you so much, Ms. Kate. Ms. Chilufya?
Thank you so much, Kate. I think no better way to put it. Just to add that insurance enables business to operate in a cost-effective manner by providing risk transfer mechanisms. So what Kate has spoken into, a risk transfer mechanism. And just to cite an example for somebody that is watching today, you would look at the COVID-19 pandemic. The pandemic has just amplified the importance of insurance, the insurance sector itself, and just the role that it plays in issues of generating economic activities. You find that as individuals or as the businesses, with COVID-19, we've seen the partial and full closure, the lockdowns that have happened in different parts of the world. And you actually say that this has impacted the businesses. And for me, largely so, it is to a small to medium entrepreneur. they've really been hit the hardest, because you just think and say everything that you think you were doing has suddenly come to a standstill. But when you have insurance in place, these are some of the mitigants that you actually put in place. And before you realize it, is that they have a long-lasting positive impact on the economy itself. So do not be stressed financially. Take that risk and pass it on to an underwriter, and have a peace of mind, because ultimately you don't want to be bankruptcy because you've not put your financials in order. So just ensure that, and remember that insurance is part of financial planning. So whatever you do, you make sure that it is there when you're ticking that box and the list that you have put in place. Insurance must always be there, because it's a risk mitigant at the end of the day. Unforeseen risks will always come. Make sure that they are covered for. Thank you, Judith.
Thank you so much. Mr. Ikurete? Can you hear us? I think you're on mute again. Hello?
Okay.
There we go.
Can you hear me? Just
yes, sir. Yeah, we
me.
can hear you now.
Okay. What I would just like to add, even though my connection has been fluctuating, but I heard a bit of what Kathy said, and that to say that for anyone listening, insurance is what determines, your net worth at any point in time. So this is how I explain it to people for easier understanding. So you've got your car, you've got your jewelries, you've got your car put together, and when you don't have insurance, when something happens to your car, you've got to take money from your cash to deal with it. And so your net worth goes down. So it depends on how you look at it. From a financial include knowledge, so I would put it, insurance needs to be inside all of what you are doing, so that when you want to say that your net worth has increased, it has to be that whatever had happened in the course of that journey, you had been helped by insurance at least to stay the same, not to go lower, at any point in time. And so we find a way to get insurance embedded in what we do. And like I said earlier, we've got insurance, health insurance, we've got travel insurance, we've got all classes of insurance that's available for us as individuals and for our businesses. Thanks.
Thank you, sir. Mr. Rodwell?
Thank you, Judith. Just for clarity, the question is about?
So the question is asking, how does insurance contribute to economic development?
All right. Just to add to what my colleagues have said, I think that it contributes in two ways. The first one is via the GDP, the gross domestic product, which is basically a sum total of the monetary value of all the finished goods and services. And you notice that for any nation, when they are calculating the GDP, insurance will fall under the financial institutions. In fact, they call it financial institutions and the insurance. So we add value there. Then the other way to speak to my colleagues is via protecting and stabilizing the economy. How do they do it as insurance? So we have national assets. For instance, you have a mine. In the case of Zambia, we've got two big mines, in fact, more than two. Some of them is actually Mopane and the KCM. So imagine if those mining assets are damaged and there was no insurance. Those are actually, they've got huge values. So it will be a burden on Zambia, as an example. And we know that copper is our largest income earner for Zambia. So if there's any disturbance in the mining sector, that will affect the economic development of Zambia. I'm just giving I'm just giving it as an example. So now what insurance does is that when there is a huge loss, say a fire, they will come in, pay to ensure that within the shortest period of time, those assets are put back and the operations continue and the growth of the economy is not disturbed. In the absence of insurance, it will mean that even government should come in, the shareholders will need to start sourcing for funds. It will be all confusion and the growth of the economy will be affected. And at the end of the year, the GDP of the country will not be as projected. So insurance stabilizes and smoothens the growth of the economy. Thank you.
Perfect. Thank you, thank you, thank you. At this point, we have come to the end of this session. I want to say a big thank you to Kate from South Africa. I want to say a big thank you to Chilufya from Zambia, Rodwell from Zambia, Ekerete from Nigeria. It's been such a great time with you all. I'm hoping that everyone who is watching us right now got value from this session. I'm hoping that people who are going to watch the video afterwards will get value as well. Personally, I know 100% that I'm not leaving here the same. I learned so much from you all. Thank you, thank you, thank you. I hope that you all have a fantastic weekend and I hope you have a great evening.
Oh, thank you so much.
Thank you so much.
Thank you for
Thanks,
having
everyone.
Thank you.
Panel.
Bye.
Thank you and bye-bye to everybody.
Thank you. Thank you. Bye.
Bye-bye.